In 1939, Britain ruled the largest empire in history, a quarter of the world's land, a quarter of the world's population. The pound sterling was the world's reserve currency, and the Royal Navy dominated every ocean. Britain was the unquestioned superpower. Just 17 years later, in 1956, Britain was begging the United States for permission to protect its own interests. This story is almost always told the wrong way. We're taught to believe Britain lost its empire because the world became more enlightened, because colonialism became morally unacceptable, because people demanded independence. And all of that is partially true, but none of it explains the speed, the humiliation, or the scale of the collapse. Empires don't disappear in a single generation because of changing values. They disappear when they can no longer pay their bills. The real story of Britain's collapse isn't about ideals. It's about arithmetic. It's about what happens when a global power's ambitions outgrow its economic base. Empires don't fall when the flags come down. The flags come down after the balance sheet has already collapsed. For most of the modern era, Britain's true power wasn't land or population. It was finance. The British Empire was built on money moving through London. The pound sterling wasn't just a currency, it was the backbone of global trade. Contracts were written in pounds. Governments stored their reserves in pounds. British banks financed infrastructure on every continent. When Britain spoke, markets listened. This financial dominance allowed Britain to punch far above its weight. It could borrow cheaply, fund wars without immediate collapse, and sustain a navy larger than the rest of the world combined. As long as the pound was trusted, Britain could live beyond its domestic economy. That was the hidden superpower. But World War I shattered that system. The war forced Britain to do three things that permanently weakened it. First, it raised taxes to levels the economy had never seen before. Second, it borrowed unprecedented amounts of money, including massive loans from the United States. And third, it sold off foreign investments that had generated income for decades. Britain didn't just spend money during the war. It liquidated the future to survive the present. When the war ended, Britain tried to pretend nothing had changed. It attempted to restore the pound to its old status, to go back to the gold standard at the pre-war rate as if the damage could be erased. But the economy couldn't support it. British exports became too expensive. Industry stagnated. Unemployment stayed high. The empire still looked enormous on a map, but economically it was already weaker than its rivals. Then came World War II, and this time there was no buffer left. Britain fought the war through total economic mobilization. More than half of all national output went to the military. Civilian consumption collapsed. Savings vanished. Gold reserves drained away. Britain survived, but survival came at an extraordinary cost. By the early 1940s, Britain was no longer financing the war. It was being financed. The United States stepped in with supplies, food, fuel, and weapons, but this was not charity. Every shipment increased Britain's dependence. Every loan shifted leverage across the Atlantic. Power doesn't disappear, it moves. When the war ended, Britain was effectively bankrupt. Its national debt was more than double the size of its entire economy. It owed the United States billions of dollars it had no realistic way to repay quickly. And at that exact moment, the post-war financial order was being designed. Britain arrived at the negotiating table with ideas, experience, and prestige. The United States arrived with money. In the end, money decides. The dollar replaced the pound as the world's reserve currency. That single decision mattered more than any election or treaty. It meant global demand would now flow into dollars, not pounds. It meant America could run deficits that Britain no longer could. It meant financial gravity shifted permanently. After that, Britain was trapped. It still wanted to act like a global power, but it no longer had the economic tools to support that role. The pound was overvalued. Imports exceeded exports. Foreign currency reserves constantly ran low. Every crisis looked the same: defend the pound, burn reserves, raise interest rates, then devalue anyway. Each cycle weakened credibility further. The Suez Crisis of 1956 exposed the truth to the world. Britain still had soldiers, ships, and alliances. What it didn't have was financial independence. When the United States threatened to dump British pounds and block emergency loans, the choice became brutally simple: withdraw or collapse. Britain withdrew. That moment wasn't just a diplomatic defeat, it was a public confirmation that British power now existed only with American approval. For the first time in centuries, Britain discovered that it could win on the battlefield and still lose the war that actually mattered. From that point on, the empire's collapse didn't just continue, it accelerated. Independence movements across Asia, Africa, and the Middle East gained confidence. They understood something fundamental had changed. Allies quietly recalculated their loyalties, markets adjusted their expectations, and the myth of British global dominance evaporated almost overnight. The illusion was gone, and once an illusion breaks, it never comes back. Through the 1960s and 70s, Britain entered a prolonged period of decline that no speech or slogan could reverse. Repeated currency devaluations sent a clear signal to the world. This was a country struggling to pay for its lifestyle. Inflation steadily eroded living standards. Wages lagged behind prices. Savings lost value. British industry, once the engine of the world economy, struggled to compete against more efficient producers abroad. Factories closed, productivity stagnated, skilled workers and ambitious young people left in search of better opportunities elsewhere. The nation that had once dominated global finance was now dependent on external support and foreign confidence just to stay afloat. In 1976, the humiliation became official. Britain turned to the International Monetary Fund for a bailout, an institution it had helped design in the aftermath of the Second World War. The terms were unforgiving, spending cuts were imposed, austerity became policy, economic decisions were subjected to outside oversight. The nation that once set the rules of the global system was now being managed by them. This wasn't just an economic moment, it was a psychological one. Britain was forced to confront the reality that its era of unquestioned power was over. By this point, the empire was no longer sustainable in any meaningful sense, not politically, not militarily, and not economically. Maintaining overseas territories required money, troops, infrastructure, and constant attention. None of it generated enough return to justify the cost. The numbers simply didn't work anymore. Decolonization followed quickly, not because Britain suddenly became generous or morally transformed, but because it had no alternative. Every colony required resources Britain no longer had. Administration was expensive, security was costly, infrastructure demanded continuous investment, and none of it paid for itself anymore. Letting go wasn't an act of idealism, it was an act of necessity. The empire didn't end in a moment of enlightenment, it ended when the bills came due. This is the lesson history rarely teaches clearly, and even more rarely emphasizes. Empires don't end because leaders wake up enlightened. They don't collapse because of speeches or principles. They end because reality catches up. Debt limits ambition, currency weakness limits power, dependence limits sovereignty, and once a country crosses that line, its choices narrow rapidly. Britain's collapse followed a clear and almost mechanical sequence. First came massive war-driven debt, then the loss of reserve currency status. This was followed by chronic trade deficits, repeated devaluations, and growing dependence on foreign creditors. Finally came the forced liquidation of assets, influence, and global reach. This pattern isn't unique to Britain. It isn't even historical. It's structural. It's what happens when financial foundations can no longer support geopolitical ambition, and that's why this story matters today. The United States is not Britain. The world is different. The scale is different. History never repeats perfectly, but the underlying logic remains the same. Debt continues to rise. Deficits are no longer treated as temporary emergencies, but as normal conditions. Reserve currency dominance is questioned more openly than it has been in decades. Interest payments consume an ever-growing share of national resources, and the most important warning signs don't announce themselves with headlines or crises. They appear quietly, buried in spreadsheets, bond markets, and balance sheets. Britain didn't choose to end its empire. It was pushed there by financial reality, one decision and one compromise at a time. The most dangerous moment for any superpower is believing that it's exempt from the rules that ended the last one. Empires don't fall when they're defeated on the battlefield. They fall when the money runs out. If this perspective gave you a new way of looking at history, make sure to subscribe. History tells us far more than we usually realize, and I'll be here to show you what it's really saying.